Good evening, good afternoon, good morning. I'm Sen B'Hiro, and today, the crypto market is once again proving that sentiment and reality rarely agree with each other. Because according to the Fear and Greed Index, we're apparently still living through the financial apocalypse. And yet, Bitcoin just rallied back above $71,000. So today, we're going to unpack what's really happening. Oil shock fears are easing, risk markets are stabilizing, and Bitcoin just got another massive vote of confidence from one of the most aggressive corporate buyers in history. Strategy just bought nearly 18,000 more Bitcoin. Meanwhile, analysts are debating whether crypto's next growth wave won't come from investors, but from something called internet labor markets, which sounds either like the next phase of decentralized adoption or the next buzzword someone invented to sell a PowerPoint deck. And despite Bitcoin pushing higher, the market is still stuck in fear, which raises the obvious question. Are traders finally about to flip bullish again? Or are we just setting up the next volatility trap? This is the SENB Daily Brief. Let's break it all down.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
All right, let's take a look at where the market stands right now, because despite the panic sentiment we've been seeing across crypto, prices actually pushed higher today. Starting with Bitcoin, BTC is currently trading around $70,000 to $71,000 after briefly pushing above $71,500 intraday. That move represents roughly a 3% rally in the past 24 hours, and it comes after several days of consolidation near the $67,000 to $68,000 support zone. Looking at the daily chart, Bitcoin is still trading below the 50-day moving average, which sits around the $73,000 area, but momentum has clearly shifted upward from the recent panic lows. Technically speaking, the market appears to be forming a short-term recovery structure after the sharp February sell-off. Meanwhile, Ethereum is stabilizing as well. ETH is currently hovering in the $2,040 to $2,100 range, gaining a bit over 2% on the day. However, Ethereum remains well below its 200-day moving average, which is still sitting up near the $3,200 level. So, while ETH is participating in the rebound, the broader trend still reflects significant downside pressure over the past few months. Looking at the major altcoins, XRP is trading around $1.39, up slightly on the day, but still locked inside a long consolidation range after the sharp February drop. Momentum indicators suggest the market is stabilizing, but XRP has yet to reclaim the $1.50 resistance zone, which traders are watching closely. Solana is also showing signs of life. SOL is currently trading around $86, bouncing modestly after falling below $80 during the recent sell-off. The key level traders are watching here is the $90 resistance area, which lines up with the descending moving averages on the daily chart. Now here's where things get interesting, because even though prices are recovering, market sentiment is still deeply negative. The crypto Fear and Greed Index remains firmly in the fear to extreme fear zone, hovering roughly in the mid-20s depending on the source. That tells us something important. Traders are still positioning cautiously, even as prices begin to stabilize. And finally, looking at Bitcoin dominance, BTC continues to hold roughly 58 to 59% of total crypto market share. That dominance trend suggests capital is still flowing primarily into Bitcoin rather than altcoins, which is typical during periods of macro uncertainty. So, to summarize the market right now, Bitcoin is reclaiming the $70,000 level, Ethereum is stabilizing near $2,050, major altcoins are attempting short-term rebounds, sentiment remains deeply cautious, and Bitcoin dominance continues to hold elevated levels. Which brings us to the first major story of the day. Because while markets were dealing with oil shock fears last week, today's rally appears to be tied to a shift in the macro narrative. When we come back, we're going to look at why Bitcoin surged above $71,000 today and how easing oil supply fears may have helped trigger the rebound. Stay with us.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
All right, welcome back. Let's start with the story that moved markets today. Bitcoin pushed about $71,000, briefly touching the $71,500 level intraday, marking roughly a 3% gain over the past 24 hours. And importantly, this move wasn't just Bitcoin. Altcoins across the market moved higher as well, including XRP, Doge, SUI, and several smaller caps, all catching a lift as risk sentiment improved. So the obvious question is, what changed? The answer appears to be macro relief. Over the past week, markets have been rattled by fears that escalating tensions in the Middle East could trigger a major oil supply disruption. At one point, oil prices spiked toward $120 per barrel, raising concerns about inflation, energy shortages, and another round of global economic stress. But today, the narrative shifted. Statements from President Donald Trump suggested the Iran conflict could potentially de-escalate sooner than expected. At the same time, the International Energy Agency signaled that countries may be prepared to release emergency strategic oil reserves if necessary. That combination triggered a sharp reversal in oil markets. Crude prices fell back below the $90 level, dramatically reducing the immediate inflation shock that traders were worried about. And when inflation fears drop, risk assets tend to rally, which is exactly what we saw today. Bitcoin surged past $71,000, while crypto markets broadly moved higher. Another interesting detail here is where the buying pressure appears to be coming from. Several market reports point to strong trading activity in U.S. spot Bitcoin ETFs, suggesting institutional capital is still actively participating during these volatility swings. In other words, even while sentiment remains cautious, big money is still stepping in on dips. Now, the key question becomes, is this the beginning of a larger rebound, or just another relief rally inside a volatile market? If macro conditions continue improving, especially if inflation data comes in cooler than expected, Bitcoin could attempt to move back toward the $74,000 resistance level, with some analysts even eyeing a broader range between $80,000 and $85,000. But the risks haven't disappeared. If oil prices spike again, or inflation surprises to the upside, the market could easily fall back toward the $70,000 support zone we've been watching. So for now, the market is doing what markets often do during uncertain times. It's breathing, recovering from panic, but not quite ready to declare victory. And speaking of confidence in Bitcoin, our next story involves one of the most aggressive corporate buyers in the entire crypto industry, because Strategy, formerly MicroStrategy, just added nearly 18,000 more Bitcoin to its treasury. And the numbers behind that purchase are pretty staggering. We'll break that down next. Stay with us.
Some mornings start quiet. No rush, no noise. Just good people and the decision to roll forward.
Welcome back. While markets were reacting to macro headlines today, one company quietly made another massive bet on Bitcoin. Strategy, formerly MicroStrategy, has purchased another 17,994 Bitcoin. The purchase totaled approximately $1.3 billion, with an average acquisition price of about $70,946 per coin. And yes, that's a very deliberate number, because it means the company was buying directly into the volatility we've been seeing around the $70,000 range. The purchases occurred between March 2nd and March 8th, and the transaction was officially disclosed through an SEC filing released on March 9th. Funding for the purchase came through a mix of equity sales, including roughly $900 million in common stock and about $377 million in preferred shares. Which brings us to the most astonishing number in this story. After this latest purchase, Strategy now holds 738,731 Bitcoin. At current market prices, that stash is worth roughly $50 billion. Yes, 50 billion. That makes Strategy not just the largest corporate holder of Bitcoin, but one of the largest single holders of Bitcoin anywhere on Earth, including many governments. Now, the strategy here hasn't changed. Michael Saylor has been very consistent about how the company views Bitcoin, not as a trade, but as a long-term treasury reserve asset. In simple terms, the company is converting corporate capital into Bitcoin and holding it on the balance sheet, which means every time markets experience volatility, Strategy tends to do the exact opposite of retail traders. They buy more. And judging by the scale of these purchases, they appear to have fairly strong opinions about where Bitcoin might be headed over the long run. Another important implication here involves supply dynamics. When a corporation accumulates this much Bitcoin and stores it in treasury, those coins effectively leave the circulating market, which means fewer coins are available for trading on exchanges. That dynamic becomes even more interesting when you combine it with ongoing ETF demand and institutional inflows. So the big question now is whether this accumulation trend continues. If Strategy maintains its current pace of buying, their total holdings could cross 750,000 Bitcoin, roughly 750,000 Bitcoin, sometime later this year, which would represent an absolutely enormous share of the available supply. But institutional accumulation is only one part of the crypto adoption story, because according to one major investment firm, the next wave of crypto growth might not come from investors at all. Instead, it may come from something called internet labor markets. And yes, that phrase is exactly as strange as it sounds. We'll explain what it means next. Stay with us.
She redefined what it meant to race without limits. She proved that silence could be louder than words. Fearless, fast, focused. A reminder that champions are built on grit. That same intensity now fuels her signature blend. Roosted and roasted. Bold Italian roast crafted with the spirit of champions. Ashley's Roosted and Roasted, only at WholeShotCoffee.com.
Welcome back, everyone. So far today, we've talked about macro relief and institutional accumulation. But the next story takes us somewhere a little more futuristic. Because according to Multicoin Capital, the next wave of crypto adoption may not come from investors at all. Instead, it may come from something called internet labor markets, which sounds like the title of a white paper someone wrote after drinking too much venture capital coffee. But the idea itself is actually pretty interesting. In a thesis published earlier this year, Multicoin argued that the future of crypto growth will shift away from people buying tokens and toward people earning them through work. Specifically, small digital tasks performed across decentralized networks. Things like data labeling for artificial intelligence systems, sharing unused internet bandwidth, providing compute resources, or contributing to distributed data networks. In other words, instead of buying crypto on an exchange, users would earn it by participating in the infrastructure of the internet itself. Multicoin refers to this model as internet labor markets, or ILMs. The idea is that millions of users could eventually earn small amounts of crypto through micro-tasks, similar to a global digital gig economy. And thanks to blockchain payments and stablecoins, those transactions could be settled instantly. Supporters of the model argue this approach could help solve one of crypto's biggest problems, mass adoption. Because for many people around the world, buying crypto requires access to exchanges, banking rails, and regulatory clarity. But earning crypto for work? That's a much simpler entry point. Several early projects are already experimenting with this concept. Protocols like CrunchDAO, which allows contributors to build and submit data models, and Fuse, which is exploring decentralized service marketplaces. But Multicoin believes the real breakthrough may come from combining these labor markets with AI agents and automated micropayments. Imagine a world where AI systems continuously hire humans for tiny tasks, paying them instantly in crypto. That's the long-term vision, a decentralized global labor network built directly on top of the internet. Of course, the idea still faces major hurdles. Adoption would require integration with major operating systems, applications, and global payment rails. And the economics of microtask networks still need to prove they can scale. But if venture capital continues flowing into these projects, internet labor markets could become one of the most important narratives shaping crypto over the next few years. Now, while venture firms are debating the future of Web3, traders are still wrestling with something much more immediate, market sentiment. Because despite Bitcoin's rebound above $70,000, the crypto market is still firmly stuck in fear territory. We'll break down what that means for traders next. We'll be right back.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
And we're back. Now, let's talk about something that often moves markets just as much as price itself, sentiment. Because despite Bitcoin's rebound above $70,000, the crypto market is still firmly stuck in fear territory. According to multiple sentiment trackers, including the widely followed Crypto Fear and Greed Index, the market is currently sitting somewhere between 13 and the mid-20s depending on the source, and anything below 25 is considered extreme fear. In fact, the market has now spent roughly 38 consecutive days in the extreme fear zone. That's one of the longest fear streaks we've seen since the major drawdowns of previous cycles. What's driving that pessimism? Several factors appear to be weighing on traders. First, recent volatility. Bitcoin experienced a significant drawdown earlier this year, falling roughly 44 to 47% from its all-time highs, which naturally shook confidence across the market. Second, geopolitical tension. The ongoing uncertainty surrounding the Iran situation and global energy markets has injected a strong dose of macro risk into financial markets more broadly. And third, there are still lingering concerns about inflation and potential stagflation scenarios, particularly if energy prices remain unstable. So even though Bitcoin has stabilized and begun to rebound, traders remain cautious, which creates one of the most interesting dynamics in markets. Prices moving higher while sentiment stays negative. Historically, this kind of environment can actually be bullish. Extreme fear often occurs near local bottoms, when weak hands have already sold and long-term investors begin accumulating. But sentiment indicators aren't crystal balls. They're simply reflections of trader psychology. If macro conditions improve and inflation data comes in lower than expected, the fear and greed index could quickly climb back toward neutral territory, which begins around the 47 level. But if oil prices spike again or inflation surprises to the upside, fear could easily deepen. And if the index drops below 10, that would signal one of the most extreme panic environments we've seen in years. For now, the market appears to be stuck in that uncomfortable middle ground. Prices are stabilizing, but confidence hasn't fully returned. And that brings us to the final story shaping today's market narrative. Because while traders debate sentiment, analysts are already arguing about something much bigger, where Bitcoin might go next. Some forecasts are calling for a move toward $120,000 in the coming months, while others believe the market could remain trapped in a $60,000 to $70,000 grinding range. We'll break down that debate next. Stay with us.
Monday morning starts here, coffee in hand, ready for the grind. Leaving the bike behind, chasing the week ahead. Fueled by the passion to ride and the coffee that gets us there. Whole Shot Coffee. Fuel your life.
All right, let's zoom out for a moment and look at the broader picture shaping the crypto market right now. Because today's rebound isn't just about Bitcoin. It's about global macro conditions. As of today, the total cryptocurrency market capitalization has climbed roughly 3%, bringing the overall market back to somewhere between $2.4 and $2.5 trillion. Bitcoin is stabilizing in the $70,000 to $71 range, while Ethereum is trading between roughly $2,050 and $2,100. Both assets posted gains of around 2 to 3% on the day, with many altcoins following the same upward move. But what's driving that shift? Once again, macro relief. Earlier this week, oil prices were approaching $120 per barrel, which sparks fears of another inflation surge and a potential shock to global markets. But as diplomatic signals suggested tensions around Iran may ease, and the International Energy Agency indicated emergency reserves could be released if necessary, crude oil prices fell sharply, dropping below the $90 level. And when oil falls that quickly, inflation expectations tend to cool, which allows investors to rotate back into risk assets, including equities and crypto. Another important factor here involves capital flows into Bitcoin ETFs. Reports indicate that U.S. spot Bitcoin ETFs have seen hundreds of millions of dollars in weekly inflows, with estimates ranging from roughly $568 million to over $1 billion in recent sessions. That institutional demand appears to be helping absorb selling pressure that emerged during the recent market correction. In other words, even while retail sentiment remains cautious, institutional money continues to accumulate exposure. Now, the next major catalyst for markets will likely be U.S. inflation data, specifically the upcoming Consumer Price Index report. If CPI comes in at or below expectations, around 2.5% year over year, analysts believe Bitcoin could attempt another push toward the $74,000 resistance level, with Ethereum potentially targeting $2,200 or higher. But the risks remain very real. If inflation surprises to the upside or geopolitical tensions escalate again, Bitcoin could easily revisit the $65,000 support zone, while Ethereum may test levels closer to $1,800. So the market right now is balancing two competing forces, improving macro conditions and lingering uncertainty, which means the next few weeks could be critical in determining whether this rebound becomes a sustained trend or simply another pause in a volatile market cycle. And with that, let's move to one of my favorite parts of the show, the Proof of Thought mailbag, where we take a look at what you, the viewers, are thinking about the market right now. Let's see what came in today, right after the break.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
All right, it's time for the Proof of Thought mailbag. This is where we take a look at what the internet, which is never wrong and always calm, has to say about the crypto market. Let's see what came in today. This first one comes from @DiamondHandsDave, who writes, Sen, I sold everything at $67,000 last week because everyone said the market was crashing. Now Bitcoin is back above $71,000. Should I buy back in? Dave, I'm going to assume you're new here because the classic retail strategy appears to be sell during panic, then buy back higher once the panic stops. Wall Street calls this providing liquidity. Next up, we have @MacroMaddie, who says, is Bitcoin really moving because of oil prices now? I thought crypto was supposed to be independent from traditional markets. Yes, Maddie. In theory, Bitcoin is independent from traditional markets. In practice, traders are still humans, and humans tend to react to things like inflation, war, interest rates, and energy prices. So while the long-term thesis may be independence, short-term price action still lives in the same macro universe as everything else. All right, this one is from @AltcoinWarrior420. And yes, that username already tells us where this is going. He writes, Sen, Bitcoin dominance keeps going up. When alt season? Ah, yes, the eternal question. Alt season usually begins immediately after everyone stops asking about alt season. Historically, altcoins tend to outperform when Bitcoin stabilizes after a strong move higher. Right now, Bitcoin dominance is still hovering around the high 50% range, which means capital is still concentrating in BTC. Translation: alt season tends to arrive when confidence returns, and judging by the fear and greed index, we're not quite there yet. Next up is @ETF Watcher, who asks, if institutions keep buying Bitcoin through ETFs, does that mean the supply crunch is inevitable? It certainly increases the probability. Between corporate treasury accumulation, like Strategy's recent purchase, and ongoing ETF inflows, more Bitcoin is steadily moving into long-term storage, which means fewer coins remain available for trading. And when demand rises, while supply becomes harder to find, markets tend to do something very surprising. They go up. And finally, we have one from @SkepticalSteve, who writes, Sen, everyone keeps predicting $120,000 Bitcoin. Isn't that just hopium? Steve, in crypto, there are two types of predictions, the ones that turn out to be wrong and the ones that turn out to be early. Markets are probabilistic. Price targets aren't guarantees. They're simply estimates based on current trends, liquidity flows, and macro conditions. So the real question isn't whether $120,000 Bitcoin is possible. The real question is what conditions would make it likely. Now it's your turn. Drop your questions in the comments, and you might see your comment featured in the next Proof of Thought mailbag. And tonight's question for the community is simple. Do you believe Bitcoin has already seen the local bottom? Or are we setting up for another major volatility move first? Let me know what you think in the comments below. We'll be right back.
Our beans are washed in ancient waters, filtered through coal seams deep beneath the Utah mountains. Okay, not really. We totally made that up. But it does sound badass, doesn't it? Here's the truth. Premium Guatemalan beans, aged for 30 days in real whiskey barrels, then carefully roasted smooth in the golden light of California, inspired by the legendary Drunkard's Wash Desert Race in Price, Utah. Bold, smooth, with a subtle touch of whiskey and oak. Drunkard's Wash. Whiskey barrel aged, bold and unmistakable. From Whole Shot Coffee Company, fuel your life.
So, what did we learn today? Bitcoin rallied back above $71,000. Oil panic cooled off. Institutions continued accumulating, and the market is still stuck in fear. Which, if you've been around crypto long enough, should sound very familiar. Because crypto markets have a habit of doing two things at the same time. Prices move up, while traders remain convinced the world is ending. Right now, we're watching a market caught between macro uncertainty and long-term adoption. Oil prices, inflation data, geopolitical tensions, all of those forces are shaping the short-term narrative. But underneath that noise, the larger trends are still developing. Institutions continue accumulating Bitcoin, developers continue building new infrastructure, and new adoption models, like internet labor markets, are beginning to take shape. Which means the real story of crypto probably isn't happening in today's price candle, it's happening slowly, in the background. Of course, that won't stop the internet from declaring the market either dead or going to the moon every 6 hours, but that's part of the fun. For now, Bitcoin remains above the $70,000 level, sentiment remains cautious, and the next major catalyst will likely come from macro data and institutional flows. So, we'll be watching closely. If you enjoyed today's briefing, make sure to like the video, subscribe, and turn on notifications so you don't miss future updates. And remember, signal through the noise. I'm Sen B'Hiro, thanks for watching, and we'll see you in the next one. The SENB Daily Brief is a production of Sen B'Hiro Media in collaboration with Whole Shot Coffee, coffee that fuels champions. Written and hosted by yours truly, Sen B'Hiro. Production, editing, and scheduling handled by Maya Valencia. who somehow keeps me on time, caffeinated, and occasionally polite. Original theme music composed and produced by Paul Hahn, the community legend whose beats hit harder than a Fed rate hike. Research support provided by the SENB community. Proof that sarcasm and spreadsheets can coexist. For more shows, merch, and on-chain chaos, visit senbhiromedia.com. Thanks for tuning in. Stay caffeinated. And remember, if it's not in the brief, it probably wasn't bullish anyway.
Set my wallet free.